Thanks for joining us today. I've got Akiba Leisman with me, CEO of Mako Mining. I thought, it's been a couple of months. I don't know, I think it's been about a month since we did our webinar update at the end of March. And I just thought it'd be a great opportunity to do a live Q&A about some of the drill results that they've had out recently, kind of maybe get an update on construction and the mine plan. So if you do have questions, please type them in the Q&A, or you can email them to me at deborah@adcap.ca or the info@adcap.ca mailbox. And I will remind you that some of the comments today will have forward-looking statements. If you don't know what forward-looking statements are, I would recommend that you check out the company's disclosure on the website and the presentation. We aren't going to work off a presentation today because I believe everyone on the call should have a fairly extensive familiarity with Mako. So we're really just going to do a Q&A and maybe an update on the drill program. So Akiba, I don't know if you want to start with the results that were out this morning and talk about Aras and San Albino, or if you want to talk about Las Conchitas or the new concession. You just start, give us a little update.
Sure. Great, thanks, Deb. Yeah, just as a review, we're basically doing three things simultaneously. One, we're in the middle of building a mine right now over San Albino, and that was what our press release this morning referenced, which I'll get to in a second. Secondarily, we have a greenfields exploration program going on to the south of San Albino, an area called Las Conchitas. We've actually put out some pretty extraordinary results on that over the course of the last 6 weeks as well. And then thirdly, after this mine is going to be turned on, we'll focus on doing some more regional exploration work and eventually unlocking the code to our orogenic gold mining system. So a little bit of an update. About 6.5 weeks ago, I put out a press release that due to the pandemic, we took down our staffing level from just over 400 people to just under 250 people. That had the practical implication of moving our first gold pour from late this summer to sometime Q4. So we're tracking at about a 6 to 8 week delay based on our reduced staffing and also some supplier delays, as you can imagine, during this really unprecedented global logistics nightmare that we're going through right now. But in the meantime, our project was continuing unabated. We're about 65% done with building our mine. Now that most of our key equipment to the plant is on site, we're really going to be focusing on the next, call it 5 months, completing our tailings management facility. And at the same time, we're incorporating all of the work that we've done in our infill program to San Albino into effectively a mineable reserve, in which case when we actually do start mining the deposit, we'll be able to have a very well-modeled, externally vetted resource and reserve estimate to accommodate our initial 500 ton per day facility. So the press release that we put out this morning was on an area called Aras, which was a different zone, but part of San Albino. So taking a step back a little bit, San Albino is made up of 4 veins that we're going to be taking out in the open pit. The most advanced of those veins was the San Albino vein, which we spent about 23,000 meters of drilling doing an infill work last year. We still have quite a few holes that we need to release over the course of the last month. And all of that work was part of what we call the West Pit. The results that we have, this is a good map to take a look at. So the West Pit is all the way in the top left of this diagram, and in fact, even a little bit off of it. The results that we put out this morning was on the fourth of these veins going towards the southeast, the vein called Aras. And Aras outcrops, at least in the zone that we were infilling with this press release, in that central pit area. Now, some of the results that we put out this morning were extraordinary. So we hit about 1 ounce gold material over 4.2 meters true width, situated 2 meters from surface. So this is well within a single mining bench. Effectively, this vein and zone outcrops. We've been able to string together about 80 meters of strike on this very high-grade ore shoot. Through close-spaced sub 20-meter drilling, we've gotten about 100 meters of dip, but we have holes deeper on the Aras vein underneath the West Pit that can extend this dip in excess of 600 meters. On top of that, we're actually starting to see some evidence that the strike is continuing to the northeast, and all of these ounces are going to be additive to the San Albino project, making it more robust than it is right now. So maybe with that, I could take a couple of questions on maybe what the press release and its significance was this morning, and then we can go on from there.
Akiba, just so everyone's aware, I kind of wanted to circle the area. Is this where we're talking about?
Yeah, I think yeah, on the bottom side of the circle that you're drawing is where we drilled.
Over here?
Yes, something like
Okay,
that.
I'm going to circle this. It's nice, it's a nice round circle that I've got going on. Okay, we do have some questions, and I'll remind you again, you can put them in the chat or you can put them in the Q&A. Either one works. So I have one question. Oh yeah, we should address this. Akiba, hope you're feeling better. And how many drills are turning at the moment? So as you can see, Akiba didn't die.
Yeah. Those that aren't aware, my entire family caught a mild case of COVID. My wife is a physician in a New York hospital. You can imagine it was pretty crazy when she was at work a few weeks ago. I had the worst of the four of us, and even that was a pretty mild case. So about 15 or 16 days of symptoms. Only 4 or 5 of those days, my temperature exceeded 100 Fahrenheit. I've had colds, let alone the flu, that was worse than what I experienced, but completely out of the system. I'm taking baby aspirin right now, so anybody that gets it, you should do the same to avoid clotting. But I'm all better. And then in terms of the number of drill rigs, when we were drilling this late last year at the peak of our infill and exploration program, we were running 6 rigs. When we got a little bit behind our logging, so the amount of information coming out of those drill rigs was kind of more than what our personnel was able to process, we took that down to 4 rigs in late January through early March. And then when we made our employee reduction decision, principally to have safe social distancing practices at the mine, we took that down to 2 rigs, one focused on the infill work, and then one over at Las Conchitas. We are finishing up one of the drill contracts in the next 2 or 3 days. So by this weekend, we're going to remove that infill drill, and then we're going to be drilling just 1 rig over at Las Conchitas going forward until the mine turns on. So we went from 6 to 4 to 2, and then this weekend we'll be at 1 rig going forward.
I got a little diagram up there. I'm sure everyone knows where Las Conchitas is. So I got a little annotator here. It's down around here, and I believe it's this area that you're drilling. Was it by Conlate?
Yeah, towards the south of that. Yep.
And then you still have one somewhere around here.
That's right. We're gonna put in probably another 10 or 11 holes towards the northeast pit. So this is we're basically done with our San Albino infill, and then these last 10 holes will be in the Aras outcrop area, and then we'll actually be done with our infill. And then as much as the data that we can get ready by towards the end of this month will be incorporated in our updated resource and potentially reserve estimate that will be due out this summer.
Okay. And I had another question come in. Oh, you just answered it. How many more meters are planned for the program? All right. I had a question emailed to me this morning, just asking about, now that you're fully funded and fully funded for some exploration, what is your plan for the cash other than to pay your IR person a lot more?
Right. So let's go on to the fully funded part, right? So when we took out the $15 million loan from Wexford Capital, the controlling shareholder, prior to the pandemic, we describe that as really a breath-holding, belt-tightening amount of money to get the mine up and running. So there was no excess capital at the company, even prior to the pandemic. We're still trying to get a sense as to what the real delay and any cost issues with the fact that we're just running this project slower than what it was in March. So there could very well be a small, like everything on a ceteris paribus basis. We were tracking on, in fact, a little bit under budget, and there may be slight overruns because of the 6 to 8 week delay. So I want to be careful when we use the term fully funded, because even back before, this was kind of a belt tightened balance sheet that we had at the company, intentionally designed. We do think that we operate more efficiently when we're kind of scraping for that last nickel. And if there is going to be a small overrun, then the good thing about having a controlling shareholder like this is that there will be capital available to finish this, one way or the other. So that's on that front. And in terms of money being allocated to the project, we are focused on getting that 500 ton per day facility up and running. We have allocated one rig to continue greenfields drilling over at the Bayakun area. And as soon as this mine turns on, it is going to be night and day in terms of what we're going to be spending from an exploration perspective. So our estimation is that by the end of this year, not only will the other 5 rigs, which are actually still stored at site right now, will be turned on, but potentially we can look at additional staffing to increase our drill program even beyond the 6 rigs that we had at the peak of last year.
And what is your timeline for construction and commercial production?
So construction, we're about 65% done building the plant. So really the focus going forward will really be on the delivery of the dry stack tailings storage facility that we need to build. So this is going to be top of the line in terms of environmental safety and protection. So we're in the middle of excavating the area. We, oddly enough, our plastic liner for this tailings storage facility was coming from another COVID hotspot around the world in Italy. So luckily, there's only about a 4 or 5 week delay on that, and then the first delivery of the plastic is on the water, scheduled to be delivered to site over the course of the next few weeks.
Okay. And I'm going to ask a question that I have gotten less so in the last couple of weeks, but certainly was getting a month ago, which was just about Ortega and what's going on actually in Nicaragua when it comes to COVID. If you want to address that maybe for the audience.
Sure, he actually showed up. He pulled a little disappearing act during March and April. I think he went completely AWOL for, had to have been 40 days where nobody actually heard from him. So he managed to have a couple of appearances, inclusive of last week. So he's still around. In terms of Nicaragua's response to the pandemic, I think it's fair to say that they took a hands-off approach to the pandemic. They left it really up to individual companies in terms of what they wanted to do. But for a while, they were not dissimilar to some other countries in the region. They chose the path of ignoring it. Government data is sparse in terms of what we know is the infection rate in the country, but we are starting to see some anecdotal evidence that it's accelerating a bit. Borders to people are effectively closed. The Costa Rican border was closed a long time ago. The Honduras border has been recently closed. There are no commercial flights in and out of the country any longer. So you can imagine it is a taxing exercise to be managing this project remotely. Luckily, we have a couple of supervisory roles that have agreed to stay in Nicaragua for an extended period of time. But even our COO hasn't actually been at site since the end of February. So this is not the ideal situation to be building a project because of the pandemic, but we just got to make do because life goes on.
That's correct. Um, so you mentioned a 6 to 8 week delay. Is it possible that you might see further delays, or is this a relatively conservative timeline given circumstances?
Well, our official characterization of the delay was to deliver first gold pour sometime in Q4. We're trying to have a more granular understanding on what the real delays are. I've been pleasantly surprised on how little delays we've seen from our suppliers. It really has been less than a month, pretty much across the board. Almost all of our long lead items were ordered and kind of on the water when the real peak of the crisis happened. So our crusher was delivered at Christmas last year. We got our mills after a few logistical hiccups delivered to site a few weeks ago. We got a second reclaim tunnel delivered from Mexico. We've got a lot of ancillary equipment that are making the way over land to site. So from a supplier perspective, which I actually was a little bit nervous about 6 weeks ago, it looks like we're okay. In which case, the bottleneck really is just on the fact that we're running this project with less people. And if that's the bottleneck, then I think it's a reasonably conservative estimate that it will be 6 to 8 weeks. If something happens on the supplier side, then obviously there's a lot of operational risk to deal with when you're managing an operation like this in the middle of a global pandemic.
Okay, and then just a question on your high-level thoughts on gold. You are a portfolio manager at heart, and I know you have thoughts on gold production worldwide, mining costs, supply and demand. Maybe you can give us your views, and also if you could adjust your camera a little bit.
Sorry.
Oh, there you go. Yeah, you.
That was just me slouching.
Yeah, you had too much headspace. I was appreciating your hair, which is,
I know.
very nice.
I ordered my I ordered my hair clippers, and they're due to arrive this weekend. So,
well, let's do a webinar just to see the results of that.
All right. So in terms of what how I view gold, it was clear that we started a bull market even prior to the pandemic. So we've been constructive on the commodity really since 2016, and got pretty significantly bullish last year when it became clear that central banks were kind of reversing course on just global monetary policy in general. Now, what the pandemic did was accelerate everything. I mean, really, all of the gates are now off of both the fiscal and monetary systems in place. We are, whether you like it or not, we're having a global experiment on what was really just a theoretical exercise in MMT that effectively started when the real understanding on the fiscal hole that this pandemic actually caused. And if that's the case, we're going to be in a situation over the course of the next 3 to 5 years where we will have a regime change. And with that, the way that I see it is that there's the reason for being bullish last year was really just on an adjustment of monetary policy. So great that proved out to be correct. But there was the other end of the spectrum where we had a systematic shortage around the world of dollars. And just generally speaking, when the dollar goes up, gold does not perform all that well in the context of the regime that we're in right now. That shortage of dollars is reaching a pretty critical point right now. So I think there's still a lot of cross currents, but the end result of what we're in right now, I don't see any other way than moving away from the what is effectively a dollar dominant system. It's going to take some time, so I don't actually think over the course of the next year we're going to have that regime change and step function in gold. But in the context of 1 to 3 years from now, when the real understanding of what the fiscal and monetary responses need to be, number one, and number two, the end game is really the sating of this dollar short, that we're going to be coming into the situation where the US is no longer the sole reserve currency around the world. And if that's the case, we're going to be in a different monetary regime, and I can totally see gold well in excess of $3,000 an ounce in that context.
Thank you. In 2021 and beyond, besides a significantly increased exploration budget and repayment of your debt with Wexford, what other plans do you have for the free cash flow?
Right. So actually, at the end of last year was an interesting exercise, is that we weren't actually capital constrained on our exploration spending. We were personnel and ability to analyze data constrained. So it didn't actually become really apparent to me until we started to see these kinds of backlogs developing in our core processing facility over at site, that we were running about 2.5 months just backlogged on just general logging of core. So to put that in perspective, is that if we were running at that rate all out for a year, we would have been spending something in the neighborhood of about US $7 million a year. And that literally beyond maxed out our capacity to process that kind of data. So even if there are additional targets, in order for us to be spending more than that, we're going to need to have a lot more people, facilities, just the ability to process that information. So even if there's a lot of opportunities to explore, we are kind of limited by what we can do from a people perspective. And if that's the case, it's that this company is obviously going to be generating a hell of a lot more than $7 million a year plus debt service, based on the grades that we're expecting, even at that 500 ton per day facility. In which case, if there's no needs for the capital, we do not run our businesses really in any Wexford portfolio with excess cash. Now, I do think that with COVID and the global pandemic, the definition of what excess cash actually means has shifted. So we're going to be a little bit probably more conservative on our balance sheet in terms of what an appropriate amount of reserves would be relative to where we were 3 months ago. But at the end of the day, if we don't have any needs for capital, it will be returned to shareholders one way or the other.
I have a follow-on question. So when you look at your own assets globally, like if you had money to put to work, would it be on the projects that you have? Would you look at other projects? And if it is the projects that you have, which areas would you be focused on? And I actually have all those images that we were talking about loaded into one document. So while you talk, I will do my best to keep up with the regions that you're talking about.
Okay, so let's start with the organic response to that. So maybe you have the.
Can you see this?
Yep, it's off on the side.
Oh, it's. Yeah. Oh, upside down. There you go.
All
So
right,
let's start with the big picture.
Right. So on San Albino, at least from an open pit perspective, we're more or less drilled that out. I think there are incremental areas that we can probably look to add a little bit of open pit potential over there, but effectively the nearly 30,000 meters that we've drilled all over that zone has defined what we have from an open pit perspective. Underground is a different story. Las Conchitas, which is you can go to in that area, that we have not drilled that out. So First and foremost, we need to get a better handle on the geological controls over at Las Conchitas. We're starting to figure it out. You may notice that our hit rates are really going through the roof at this point because we have a better understanding of some of the local geology and the geological models and controls over at Las Conchitas. And um, and then once that happens, we're going to need to have a level of infill drilling to generate a mineable resource or reserve. So to put that into context, if you go through the entire database over at San Albino, we've put in about 70,000 meters thereabouts of core and a little bit of RC drilling to define an open pit uh, resource in that area. Las Conchitas, in terms of what we have, is roughly 3.5 times the size. Uh, so I'm not sure the back of the envelope math is entirely accurate, but you can imagine you would need to spend more than 70,000 meters of drilling to define a mineable resource over at Las Conchitas. So there's a lot of work that actually needs to happen over the course of the next few years. I don't think we need to drill it out before we expand production to 1,000, so it'll be an ongoing process. But to put in 30,000 meters a year over an area like Las Conchitas, absolutely. The rest of and I mean, you can look at this. I mean, you can take a look at some of the hits that we've had over here. A meter of 380 grams gold. That was 30 meters from surface over at LC 1970. I mean, people forget this. This is an open pit mine, and in the context of what we have, effectively these veins more or less outcrop. They tend to peak out a couple of meters from surface. 1.6 meters of 85 grams. You have 3 meters of 32 grams. And then it's going to take quite a bit of infill work to actually get this into a mineable area. But the more and more that we drill over at Las Conchitas, the more and more that we understand it. I think in general, this area is somewhat more complicated than San Albino. But with these types of deposits, complicated can actually be good. That tends to imply that something major was going on geologically over here. So the more that we understand, the better. But there's going to be a lot of drilling that needs to be done. And then if you go back to the regional map over there, so think about what I just described. Between drilling out an effectively mineable resource, you're probably over 250,000 meters of drilling that needed to happen from 2009 to, let's say, 2023 between San Albino and Las Conchitas. Our entire land package has the potential to host very similar type deposits to what we have over here. We acquired that green grounds, Puerto Rios, from our neighbor to the north, Condor. It's clear that the San Albino vein goes on the other side of the El Jicaro River, so that needs to be adjusted. So our plan is to be in this region for decades in the future. We picked up the La Segoviana, the purple area, a few weeks ago from the government, so that's a new concession that was granted to us. And frankly, the gold mineralization goes off our property in each direction. So there's plenty of work that needs to happen on what's currently about a 200 square kilometer land package. So that's number one. Plenty of opportunities to handle this organically. As I mentioned earlier, it's difficult to even imagine us spending much more than $7 to $10 million a year on exploration with the size and of the company and the nature of our personnel right now. So beyond that, you're going to have to look for external opportunities, and if not, then to return that capital to shareholders. Now, for the longest time, I couldn't. I mean, because Deb kind of alluded to this, is that a gold equity portfolio manager as well on the side. I couldn't envision Mako making an acquisition that was accretive in terms of what we were trading at. There may have been a nanosecond when the GDXJ blew up a couple of months ago that my imagination probably had a couple of names that potentially were accretive, but now I don't see any. That can change though. So I do think that there's value to having geographic diversity. I think there is value to having asset diversity. So I do think having a company that has multiple mines in multiple jurisdictions from a risk mitigation perspective is incrementally better than being a single asset producer in I'm not sure what the right adjective, let's call it an unconventional jurisdiction like we are in Nicaragua. So if we can diversify through other things on an accretive basis, then great, we can look for that. But a lot has to do with what our currency looks like, and right now relative to our peers, I don't think it looks great.
Kiva, do you have to do any work on any of your concessions in the next couple of years? Do you have any commitments?
Uh, yes, it's small amounts. So from a tax perspective and a work perspective, I think in aggregate, inclusive La Segoviana, it equates to just over $200,000 a year. So it's not a lot, but the constraint is not what we have to do. We would do more than the minimum requirements just from a geological perspective for our own benefit.
And just for my own benefit, so when we're looking at the drilling at Las Conchitas, Biocun, which region is that? Is that around here? LC 1977, is this Biocun, or is it further to the south down here?
It would be further to the south. This is a longer cross section over here. Like, so we're going by. I'm really horrible at going from 3D to 2D. It should say it on the bottom somewhere. Just scroll down a little bit. So this is a systematic cross section. So we are.
Oh, this is all mango Biocun.
Yes, this is you would be kind of into the screen more would be Biocun to the south.
Okay. And have you named these veins yet? And how many veins do you think you've identified in the Las Conchitas area?
That's a good question. This vein we're calling the Mango vein. To the south, we're calling one El Limon. But honestly, we don't even know if those two veins are different, and nor do we know if the 6 or 7 other veins that we have are different. So we name these zones based on some historical small scale mining that was done in the area where the locals call them these things, but I don't think we figured out whether these are actually separate at this point.
Okay. And then what about using excess funds to increase output and tonnage? I assume that they're asking specifically about San Albino, but I think you can expand on that.
Yeah, it's kind of our so I guess with respect to infrastructure, right? So the plant that we're building right now, the plant is situated all the way in the northeast corner, albeit on the west side of the river, uh, is where our plant is being designed. So all of the infrastructure that's in place can eventually accommodate 1,000 tons a day, with the exception of our tailings. So we'll need to find and build additional tailings capacity, which shouldn't be that big of an issue. So for instance, our crusher can handle, if it was running at 80% capacity, it would be able to handle close to 1,500 tons a day. Um, we have 2 parallel 500-ton per day mills. We are running our what will eventually be our filter press for the tailings can easily handle close to 1,000 tons a day. We have the foundations poured for 10 CIL tanks for our CIL plant. We only need 5 to run this effectively at 500 tons a day, and we can incrementally add if we need additional capacity ore residence times in the plant itself. So everything has been basically designed to handle 1,000 tons a day. From a mining perspective, this is kind of relatively selective mining in terms of having also access to the ore zones. So I struggle to see how we're going to be consistently mining 1,000 tons a day just over at San Albino. So even though our plant may be able to incrementally handle that, I do think in order for us to be at 1,000 tons a day, we need to be mining from a separate area on our property, Las Conchitas being the most advanced. So we're ready to go infrastructure-wise today, but having actually access to ore will be a challenge on a consistent basis until we open up a much different mining front in a different area in our property.
So the underground plan that was part of the PEA in 2015 has been totally abandoned.
It's not abandoned. Just all of the work that we've been doing has been getting up this into a mineable area. So, I mean, going back to when this company was Golden Rain, there was some excellent exploration work that was done on the property, but this project was being run as if it was an exploration property, right? So the PEA that was put out, the resource that was put out, was really done with kind of arm waving geology around it. If you actually wanted to run a real project and get it up and running, a lot of work needed to be done. I don't know if that was appropriately communicated to the market in the pre-Mako years, but that's kind of where we are. The infill program that we did over at San Albino and Aris as well was 100% essential before you could have made a credible production decision on this asset. So even though this was permitted, ready to go, it was done in advance of this project being ready to go.
Akiba, do you want to walk us through what we're seeing in some of these pictures? I know these are from March, they're not as recent. I can actually give you control with your mouse if you give me 1 second. And if you think there's a better picture, I can load that one up. But I think it might be interesting for people. We've tried to keep all the development pictures pretty updated on the website. But I think it might be interesting. You should have control now of the mouse on my screen.
Okay. All right. Hey, next arrow, right. How come this is not going?
Let me see.
I am clicking the right button, but
Yeah.
let me just do this. All right, so this is kind of these big tanks off to the left. Those are our CIL tanks. You are looking at this to the right is to the southwest. So this is our administration building over here, all the way to the right. When you see, yeah, this actually is a fairly recent picture. So this smooth area of concrete that was recently poured, that is the foundations for our refinery. The machine that you see in the back, that is our two-stage crusher over there. So you have our primary jaw crusher that is up on that hill. So you have a little ore stockpile zone that eventually will lead to that jaw crusher, and then that will get put into our cone crusher. The cone crusher will then go into this underground reclaim tunnel. And then that reclaim tunnel that you see kind of poking out over there will wind up having a belt that will get delivered into our mills, which I actually don't see in this picture. So maybe in another one. So those tanks that you see over here, those are some chemical storage tanks, so that which will hold some cyanide. And then you'll have tanks over here that are being developed that are now actually currently built. That is going to be where our processed ore is going to be there until it gets filtered into our filter press and eventually dry stacked into an area that is situated kind of where you're sitting right now on your screen, so into the screen itself. This is the first area of mining. So we have our production drill that's blocking out 1.5 meter samples with a this is a blast hole, so it's effectively a small scale reverse circulation drill that's doing that. Just prior to this call, we were going over some of the data that came out of that blast hole data program. So we're using that to reconcile to our block model and obviously to provide us guidance on where to do our selective mining. This is a these guys, I think, are standing on the actual reclaim tunnel over here, over at our plant. These are mills that are, I think, being loaded into the port of Savannah in the United States right now for delivery eventually through Honduras, and then the mills have been delivered to site since that time. You can see some of our guys at a meeting over here. These are some of our conveyors from the crusher itself. Those two tanks in the background will handle the cyanide storage. This is on the outside of our refinery. You can see some, not refinery, our laboratory. You can see a diversion channel off to the side because it does rain here a couple of seasons a year, albeit not as bad as what we experienced over in Mexico.
When is the rainy season, Akiba?
Soon. So the first one will probably pick up in the next few weeks, and then more or less, there's some months that are stronger than others, but more or less, this is a season that lasts until November. You'll probably get in aggregate of 600 to 700 millimeters of rain, so probably about half of what we experience in Mexico, and even then on a much more elongated time. So usually in the heart of the rainy season, probably the worst month is September, October, thereabouts. You'll get maybe an inch of rain a day during the afternoon.
And actually, if you exit out of that one and go into the April, there's some more pictures.
So, oh, this guy? Oh,
It's my chart.
Mm-hmm.
We'll talk about that in a minute. Actually, when you load that up, we can talk about that right now. Stock's up like 10% today on pretty strong volume. And I can pull my chart up in a bit. As some people know, like Grant, who I see in the audience, I am a CMT, so I do a lot of charting, and Mako looks pretty good right now, technically.
Yeah, this is some rebar work. What exactly is being built there? That actually looks like another storage tank.
It's a cage for your IR person.
Yeah, exactly. This is going to be the foundations for the refinery. Over here, this is actually where our mill footings are going to be going. So our refinery pour over there. Don't actually see the mills, and this is an excavation for one of our reclaim tunnels. The reclaim tunnels are in place because our crusher is way oversized for what we need for a 500 ton per day facility. And in order to run a mill effectively, you really do want to have a pretty consistent flow of material going to the mill. So we have this effectively an underground storage with a conveyor belt in it that will feed the mill through a stockpile of crushed ore. So we have one reclaim tunnel, which was there from the end of last year. We got a second one delivered recently. Normally, when mines have reclaim tunnels, it's usually a multi-million dollar civil works to do this. For us, we're able to have in a small scale basis an excavated tunnel like this and an $80,000 piece of equipment to get put underground. So this is a fairly cheap way of running a reclaim tunnel facility. These are our mills being delivered to site. So it was a little bit of a journey getting these two ball mills there. So our crusher is brand new. We got that built from a group called FIMSA out of Mexico, delivered Christmas of last year. These mills are not brand new. I think their birth date was in 1983. So these are pretty old. The good news.
I disagree. Young, still really young.
Right. So these were run by a coal fired power plant. So the only reason why they were using that was to process lime material. So very, very soft rock. They're in fantastic condition. They come with a rubber liner, which is great to prevent vibration. The motors were in good shape. We sent them to Managua for small refurbishment, and that's done. And there's like random components that needed to be replaced, but they were in excellent condition. And we picked up two, so we actually do have enough milling capacity to run this at 1,000 tons a day. They're getting delivered to site, being driven down.
Is this the road right by the mine?
Yeah, this is the road right outside of Hicaro. Hopefully that cow got out of the way. Yeah, and I think that's probably it for the pictures on April.
I think so, yeah. I will take controls back from you. I don't see any. Oh, I do have another Q&A. Are there any constraints to doing a reverse stock split, and what are your overall thoughts on the subject?
Yeah, last year, actually, even going back, when Marlin and Golden Rain were merging, we actually wanted to do a reverse split at the time, and the Golden Rain side didn't want to for whatever reason. And in terms of my list of priorities, that was so far down the list of what we needed to happen that I conceded and just let it be. My view on reverse splits is that it's never been a big thing for me. So at the end of the day, we have an enterprise value, and you should value us on that. How many decimal points or how many zeros we have on one side of the decimal point or the other is somewhat irrelevant, with the exception of a few things that have actually piped up that have become more significant over the course of the last few weeks, especially. It's clear that when the markets went haywire in March, custodial requirements and even margin requirements have been adjusted punitively for people to have stock in custody that are trading below certain share prices. So if that's the case, we never want to be in a situation where a small level decision impedes someone's ability to own our stock. And it's clear that some of these decisions that are being made by brokers around the world are actually impeding people's ability to hold our stock because our stock price is so low. So we're not going to spend money on doing a special meeting, but I see no reason why we wouldn't do a reverse split in our next AGM for these reasons. I think prior to some of that evidence that have come out in the last month or so, we may have linked it towards a U.S. listing. So I think that's a possibility, and that might have been the primary driver before, but now it's actually more than that. There are actually reasons to do that, even if we're not imminently going to be transitioning. Although we may inquire about what we need to do in order to uplist the United States to again make it easier for people to own our stock. So I think it hasn't been decided yet, but I think it's very likely that at some point we will do a reverse split.
And what are you talking, like a 10-for-1, a 5-to-1?
Well, I will say that if we're going to do it, we're going to do it in a way that the end result will make it easier for people to own the shares. Otherwise, it's pointless to do it, right? So we'll take a census of what individual broker requirements are, especially for the non-institutional investor is, and we'll make sure that we can, to the extent possible, accommodate as many of those relatively arbitrary decisions that some of these custodial brokers are making right now. So it may be 10, but that's actually not being driven by us. It's really being more driven by people like Merrill Lynch and Interactive Brokers than by Mako.
And your AGM's in December every year?
No, so we just filed our annual audited financials, and as part of that, we adjusted our fiscal year from end of April to a normal calendar year. So our AGM schedule will be adjusted accordingly. We haven't said what that will be yet, but normally we had it, I think, in November was our usual date. So I can imagine that it's going to be earlier this year.
Okay. I don't see any more questions. I'm going to hog the screen for a second. I did actually do a chart for today. Let's see. There you go. Can you see that?
Yep.
So yeah, like from my perspective, like you hit a 52-week high today on pretty decent volume. Like it looks like stock's going to break out again. Got like a nice year-long rising trend line, a little bit of resistance that you seem to be through. So
Did you point out on the chart where I actually took over as official CEO? Right there at the bottom.
No, it was March. I remember.
Yeah, that was the interim one. The official one.
I remember because I was going skiing in Revelstoke, and Kevin called me the day before, and that entire flight I was like a little bit screwed. The woman that sat next to me, I think, thought I was totally insane. But I'll stop this and I'll go back further. I just have to pull up the website. Are there any more questions? Akiba, is there anything else that you wanted to cover in this session?
Yeah, so in terms of news coming out, I did mention, so everybody should follow me on Twitter. So I did mention on Twitter that we have a lot of infill results for San Albino proper that need to come out the back end of this month. And we'll probably have some additional Bayakun area news probably in June. And then once I have a better handle on what our external resource estimating firm will be, we're using MDA, which is an extremely credible group. The guys that put together our previous resource, give them credit for doing the job, but they probably don't have the blue ribbon seal of approval in terms of high quality resource estimation. MDA is a different situation. They're actually a class act when it comes to putting together an external report. So once I have a better handle on where they are with the model, which really should be imminently, like in the next week or two, I'll start going over some of the technical aspects of how that model is being put together. And then sometime in the summer, we will actually have a resource revision, right? And that will be the one that's going to be the basis of our initial San Albino mine plan.
Awesome. Okay, so let's list like the next 3 to 5 catalysts and timelines and wrap it up there. And
Sure.
also, here's the 2-year chart, I think it is. I think it was March here that you took over.
Right, so people sold into the news, but then they figured out how good I was. Then they started buying. Got it.
It's good to see that COVID hasn't affected your self-esteem.
So Catalyst, like I said, so we'll have the bulk of our backlogged infill results from San Albino out in the next 2, maybe 3 weeks. Some exploration results, the resource revision, and then in terms of project updates, like really for the next 5 months, it's going to be like getting the tailings done. So there aren't going to be a lot of mills taking down cow-ridden roads, smoking the bandit style type pictures that we'll be putting out. But we should be giving still frequent updates on how we're going to be running this thing. Mining has started. Actually, so a few things on mining. We're going to try to give as much information as possible with respect to how our grades are holding up. So I'm saying this actually without any data in my hands right now, but it's clear based on how our program is set that blast hole data, which is actually going to be a key component on how we're going to define what we mine and what we don't, for a whole host of reasons, from a sampling technique and actually physically, will systematically underreport grade to what we have. So we're trying to come up with a system in place where we can actually have a more accurate view on what we're actually mining. Until we have our belt sampler working at our crusher, so basically turning the plant on, which will be this summer, it's going to be a very difficult exercise to give accurate numbers on what we're actually going to be mining. We will do our best, but even that is a fairly big challenge. So I will try to update people as much as possible as we're going to be mining this over the course of the next few months before the plant turns on. But everybody should be aware that there are going to be data issues until we turn on our crusher, before we actually have a real handle on what we're pulling out of the ground.
Okay. Well, thank you very much. Glad you're feeling better. And if there's no more questions, I think we can wrap it there. We're just at an hour anyway. And as we get more photos, I'll make sure to keep updating the website. If anyone would like a call with Akiba, let me know, or reach out to him directly. I would also say, if you don't follow him on Twitter, you should, because he posts a lot about what's going on at the project. He's pretty good at keeping the investors updated, and that's his preferred platform. I'm personally more of a LinkedIn lady, but everyone's got their their way of communicating. So thanks everyone for joining us, and thank you, Akiba.
All right.
Stay safe.
All right, thanks.
Enjoy the spring.